So for some career advice, what I oftentimes see is that as you grow in your business, whether that you're working for a corporation and you're getting those raises, you're making $150,000, $200,000 a year, and you're getting the 3, 5, 10% raises per year, that then can pose a little bit of a challenge because you have a tendency to then spend those dollars. And this reminds me of the Parkinson's law, which is basically if you have a job or have a project, you will fit the work inside the time allowed. And we do this and we see this with money a lot, where we will spend the money that we have available to us. This can lead to a trap, which means that you could start spending more and not saving or investing those extra dollars that you're earning. And I see this time and time again. A way to mitigate this trap that you could fall into is to set up your spending. So Warren Buffett said this, and he basically said, if you wait till the end of the month or the end of the pay period to save your money, there's not gonna be any money left over. And so if you get a pay raise or you know that there's going to be an influx of cash, think about not how you're going to spend that money, but think about how you're going to save it and do it straight away. You can do this through a number of ways. You can set up a calendar reminder. You could set up an automatic contribution to an account. For example, I did this with a client. They knew that they were getting this raise, and what they ended up doing is they ended up increasing that $500 savings, and we added that to their monthly contribution. So it was actually out of their control. They had me do the setup of that contribution instead of them having to go and pull that lever. And so that was really helpful because sometimes we are our own worst enemy, and that it's very helpful to have a guide or a coach like myself to be there to be somewhat of the accountability buddy. As your income grows over time, I think people have a tendency to overspend, but also I don't think you should have guilt and shame over spending a little bit more because you've worked hard for those dollars. And so from that perspective, thinking about how you can allocate those dollars in a better way. So it's not to say don't spend some money on yourself. I think that that self-love that can be really helpful, but don't just every month assign that dollar to go shopping. On the flip side, what we need to be thoughtful of is what it also does to your taxes. This is another area that I think a lot of people overlook is where is that line in the sand? So another client of mine I was working with, and they were getting some significant increases in their income. They were getting promoted, it seemed like every 6 to 8 months. And with that, they're filing single. So they're starting to make to $225, $250 a year. And on a single filer, that can be an incredibly huge tax bill if you look at it from that perspective. And then on top of that, they've also been putting a lot of money away toward their traditional 401k. And with them being in their 30s, it made a lot of sense for them to look at doing Roth conversions. So what we did is we actually did a tax plan for them to look at how much opportunity they have to convert dollars inside of that tax bracket they're already in. So as an example, if you are taxed in the 24% tax bracket, what that means is that your next dollar that you earn is taxed at 24%. What we want to understand if we're doing Roth conversions as an example is to understand how much room we have within that tax bracket. So where does it go from the 24% tax bracket to the next bracket, which in our progressive tax structure, it's going to be a significant jump. So we want to try to stay inside that limit. We don't just want to convert those IRA dollars or those traditional 401k dollars just for the sake of converting. We need to be smart about it. So that's another factor that comes to those wage increases over time is how does it then affect your tax planning strategy? And is it something that is, you set that tax planning strategy up 3, 4, 5 years ago? Now we need to readdress that and see, A, has there been some tax law changes? Right now, especially during our kind of weird political environment with Trump back in office, many of his tax policies were set to expire at the end of 2025. Well, my thinking is a lot of those things are not going to expire. So now how do we restructure that? So when we think about increasing your income over time, also think about how it's going to affect your tax planning strategy in addition to that investment strategy. So as a high achieving professional, it's important to be mindful of those raises that you get. But this doesn't mean that you've got to save every single dollar. You can give yourself a little bit of a celebratory spend. Maybe it's the new shoes or a new wardrobe, but don't go and spend frivolously month after month. In addition to that, you have to make sure that we're thinking about your tax planning strategy and investment management strategy to see opportunities where you can accelerate your wealth growth and ultimately your long-term financial picture. So if you have questions, if you have concerns about where you are, and if you're seeing your growth in your career and you're not really sure what to do with those new raises, talk with 4 Points Wealth to help you understand the long-term financial picture of your situation and help you understand how that might impact your cash flow today.